I'm very concerned about silver. Silver was the year it was supposed to bump up and jump to near 40 this year, particularly on the back of copper, and it didn't. And I'm really okay. Platinum is another one, should be catching up. I've been bearish, bullish platinum for a while just to catch up to palladium. It's got really good, solid fundamental reasons to do that. It's not working. So I'm very concerned about precious metals. But the key thing is precious metals, most notably gold, silver, platinum, and palladium. I have to put them together, most notably gold, will always have a propensity to advance in terms of the fiat currency they're based in, most notably dollars, because there's unlimited supply of dollars. And they don't have that massive elasticity supply that other commodities do. The most unique example of supply elasticity is the grains. Prices went up this year, supply came out, prices are back down. So the way I look at gold is I'm bullish. I fully expect it to continue higher, but I cannot, as a prudent investor in the days where all you had was gold, precious metals, I think every prudent money manager on the planet knows I can't hold gold, or they can't hold gold without some Bitcoin in the space, because it is clearly being replaced. The question is extrapolating that in the future. And I fully expect, okay, trend's your friend, stick with it. It's probably going to continue to happen. I think what's going to happen with gold is going to jump up to $2,000 an ounce, and it's probably never going to go back below at some point, because it's a perfect bull market compared to, not perfect, compared to all other commodities. It's an enduring bull market that's had a correction. I mean, it's only a year away from the all-time high. Crude oil, the enduring bear market, it's bounced up to the upper in the range. Its high is from 13 years ago. Why? There's a good reason. Copper just made a new high and backed off, but that high was from 10 years ago. So I think gold is going to still be one of the best performing commodities, particularly for investors. You can buy and hold physical gold, silver, platinum, palladium, but you can't do it with crude oil. You got to roll, you have to own futures and roll those futures, and they will cost you over time, guaranteed. It always will go back to contango because that's normal. So there's the big difference. When people say, oh, commodity super cycle, I say it's happening in Bitcoin. Precious metals, you can't really own them anymore without Bitcoin. I don't really say Ethereum, Bitcoin, some Ethereum. And that's just the way, that's just existing trends, Justin. Anybody who's listening to this has got a good reason for those trends to reverse. I'd like to hear it. I might not listen too long because we'll see if I agree with you. I see those trends accelerating. It's not that complicated, but there will be bumps in the road. And I view this as a pretty good bump in gold this year. When people talk about inflation, I'm like, okay, well, how's the long bond doing and gold doing? They both aren't pointing to inflation. They're pointing to predominant deflationary trends. So things like Bitcoin, when people say it's inflation hedged, yes, someday it will be, but right now it's in that price discovery stage, and that's the big difference. And it's in the process of replacing gold in portfolios.